Hello guys, welcome to the third lecture. Today we'll be doing investment property and intangible assets. In the previous two lectures, we have already covered property, plant and equipment and borrowing cost and investment property. So please do watch the previous lectures before watching this so that this lecture is more clear to you, right? Now let us start the first chapter, which is intangible asset, right? So what is intangible asset? Firstly, the thing to remember is intangible asset is shown under IAS 38, which is the standard. Okay, so you have to remember the standard as well. It is not compulsory, but if you remember the standard, it will be a better mark gaining part, because examiner, you know, uh, sees these things and notice that student knows the standards and he is knowledgeable, so they tend to give more marks to students who have knowledge about the standard name as well. So an intangible asset is an identifiable non-monetary asset without physical substance. So what is non-monetary? Non-monetary means that this cannot be used as a medium of exchange to purchase or sell the asset, right? So it is a non-monetary asset and it has no physical substance. We all know that intangible asset has no physical substance, right? And other characteristics are that it is separable. What is separable? Separable means that it can be sold, transferred, rented, or exchanged. So these four conditions, this one condition includes four conditions, which is sold, transferred, rented, and exchanged. Okay. Now the second condition is arises from contractual or legal right. Right. What is contractual or legal right? Which means an intangible asset arises from a contract or a legal right. Legal right can be obtained from the government by paying money or something, or it can also arise from a contract, right? uh, Now the two famous conditions which we are studying from the previous two lectures as well, which is it ensures that future economic benefit flows to the entity and the cost can be measured reliably. Okay, so I hope this is clear. Now moving on to recognition criteria. What is the recognition criteria? Recognition criteria for intangible asset is same as property, plant and equipment. Okay. An intangible asset is recognized only if both conditions are met. What are the two conditions? First is future economic benefits are probable, right? And second is cost can be measured reliably. So these are the two conditions which we have also studied previously. So I don't think that there is a problem in remembering this. What are the types of intangible assets? The types of intangible assets are separately acquired intangibles, internally generated intangibles, which is restricted, right? We cannot capitalize internally generated goodwill, right? Business combination goodwill is not, not a scope of IAS 38 because it is accounted under consolidation, right? Which is a different standard. Okay. Research and development cost, license, patents, trademarks, and copyrights, softwares, customer list if purchased. So you have to remember that customer list if purchased can only be capitalized. Internally generated, it cannot be capitalized. Okay. Franchisees, publishing rights, etc. are also a type of intangible assets. Now coming to initial measurement. So in property, plant and equipment, you have to remember that initial measurement is also same as property, plant and equipment. So what is an initial, what questions does initial measurement answers? What should be the amount of asset which should be recognized in SOFP, which is statement of financial position, right? So what is initial measurement? Initial measurement includes purchase price, right? Purchase price, it includes non-refundable taxes, it includes borrowing cost, it includes directly attributable cost, and it includes provision for restoration. Provision for restoration is not under intangible assets because it intangible assets does not harm to environment, or there is no restoration required for intangible assets, right? So that is why it is not a part of intangible assets. What are part of intangible assets? It is purchase price, okay, import duties and non-refundable taxes, directly attributable costs to incur to make the asset ready for use, right? So these are important things. And one thing to remember is purchase price after any trade discounts. Okay, trade discounts should be removed. Okay, so these things we have to remember. Now coming to the most important part where the questions are asked in MCQs. Okay, so there are three phases in internally generated intangibles. Okay, three phases. First phase is research phase. Research phase. Second phase is development phase. And the third phase is developed phase. Okay. So what is the difference in treatment between all the three phases? In the first phase, which is a research phase, we always expense in P&L, okay, in profit and loss. All the expenses incurred in research phase are always expensed to P&L. This thing you have to remember. It is not capitalized, okay. What is the aim? Aim is investigating new alternatives, searching for materials and concept development. No intangible asset is recognized. Okay, this thing you have to remember. In research phase, there is no intangible asset recognized, and all the expenses incurred in research phase goes to P&L. Now coming to development phase. This is important because this includes 6 conditions. Okay. In development phase, we capitalize intangible asset only when 6 conditions are met. So what are the 6 conditions? First is technical feasibility, which means we have technical expertise to make the intangible asset in-house, right? So this is important. Intention to complete. What is intention to complete? This means that the entity will not leave the project in between and it has full intention to complete the asset, right? And ability to use and sell. This is the condition. Future economic benefits are probable. We are studying this from the past 2 chapters. Reliable measurement of cost. This also we are studying. Now adequate resources. What are adequate resources? The entity should have adequate resources to complete the project, right? To make an intangible asset. Adequate resources can be technical, can be financial, can be human resource. Okay. So you have to remember that all of these conditions should be met, then only it will be capitalized. Okay, if any of the condition fails, you will expense it to P&L, right? Expense it to profit and loss. So this thing you have to remember, that if any of the condition fails, then you will expense it to P&L. Now subsequent measurement. Okay, what is subsequent measurement? Right, subsequent measurement is the recognition when we recognize the asset in the future years, right? For example, today we purchase the asset. In in the subsequent measurement, it means that we will measure the asset in year 1, year 2, year 3, right? In future years. So that is what is subsequent measurement. Subsequent measurement includes 2 model. First is cost model and the second is evaluation model. Okay. In cost model, what we do? In cost model, we amortize the asset based on the remaining useful life. Okay, we will amortize the asset based on the remaining useful life, and if the asset has indefinite useful life, if there is indefinite useful life, then it will be tested for impairment each year. This thing you have to remember. Okay, this can be asked in MCQs, right? Now what is revaluation model? In revaluation model for intangible asset, right? Revaluation model for intangible asset can only be applied if there is an active market, okay, where the intangible asset is bought and sold, right? Active market means asset is sold in huge quantum, which is in larger quantities, right? And asset is sold frequently. This thing you have to remember. Active market should exist, right? And what is active market? Active market is when the asset is sold in huge quantum, and second, it is sold frequently. So next point. Rest everything in revaluation model for intangible asset is same as property, plant and equipment. If you want to study revaluation model again, you should go to lecture number 1, which is property, plant and equipment. There I have taught revaluation model in very detail. So it is same as property, plant and equipment. Okay. Now what happens, right? In this measurement after recognition, we have studied cost model, we have studied evaluation model, allowed only effective market exists, which I have already told, right? Now, 7th point. What difference between finite and indefinite useful life? When the asset is finite life intangibles, what happens? We amortize over useful life. Second, straight line, we amortize usually on straight line basis. Third point, review useful life annually, subject to impairment. Okay, this thing we have to remember. What happens when the life of asset is indefinite, right? It is not amortized. Annual impairment tests are required. Okay, compulsory annual impairment happens for these assets. Reassess useful life each year. This is important. We reassess the useful life each year. Okay, example is brand name with no expiry, right? And some trademarks. So this you have to remember. Now moving on to amortization. What is amortization? Amortization starts when the asset is available for use, not when generating revenue. What does it mean? For example, let's take an example for this. There is an asset which was ready to use from 1st January 2006, right? It is ready to use. Now it has started generating revenue from 31st March 2006, started generating revenue, right? Now what will happen? We will amortize from 1st January 2006. Okay, we will not wait for the asset to start generating revenue. We will amortize as soon as the asset is available to use, right? When does amortization stop? Amortization stop when it is classified as held for sale or it is derecognized, right? Impairment we will be studying in the next chapter, right? What is derecognition? Derecognition. Intangible asset is derecognized when it is disposed of. Disposed of means it is sold, right? And the second point is no future economic benefits are expected, right? So these are the two conditions when the intangible asset is derecognized. What is the gain or loss on derecognition? Net disposal proceeds minus carrying amount. Okay, and this is presented in profit and loss statement. Okay, this is presented in profit and loss, right? I hope this is clear, and that is all for the intangible asset. I know this is a short video, but if you want, you can go to the property, plant and equipment lecture to understand revaluation better. Okay. Now let us move to impairment of assets, right? What is impairment of asset? Firstly, when it happens when carrying amount is greater than recoverable amount, right? It happens when carrying amount of an asset is greater than recoverable amount. It will result in an impairment loss. What is an objective of impairment loss? Impairment happens because it ensures that assets are not carried above their recoverable amounts. Okay, this ensures that the assets are not overvalued. Okay, so what are the scopes? It does not apply to inventories, right? It does not apply to deferred tax asset. It does not apply to employee benefit. It does not apply to financial instruments. It does not apply to investment property at fair value model. Okay, this thing is to remember that it does not apply to fair value model, but it applies to cost model. Okay, it also does not apply to biological assets. It also does not apply to insurance contracts. So this thing is to remember. The most important in this inventory that you have to remember: financial instruments, right? Investment property at fair value model, and biological assets. Okay, these four are important to remember. Now the question is when to test for impairment, right? The asset should be tested for impairment when the indicators for impairment are triggered. What are the indicators of impairment? There can be an external indicator, there can be an internal indicator, right? There are external indicators and there are internal indicators. What are external indicators? External indicators are decline in market value, adverse economic/market changes, increase in discount rates, market capitalization is smaller than net assets. So these are the things that are external, which are not in control of the entity, right? What are internal things? Internal indicators. Internal indicators are physical damage, right? Asset becomes obsolete, poor performance, plans to discontinue/restructure. So these are the things which are more or less in control of the entity, right? So internal indicators, we can say that it is in some control of an entity, but external indicators are not in control of the entity, right? So when is annual mandatory test compulsory, right? Annual mandatory test is compulsory for goodwill, right? Intangible with indefinite life, right? Intangible not yet ready for use. So these are the three assets which require annual mandatory test, right? Annual mandatory test. Okay. I hope this is clear. Now let's move on to what is recoverable amount. Okay. What is recoverable amount? Recoverable amount is higher of fair value less cost of disposal or value in use. What is fair value less cost to disposal? Fair value less cost to disposal is equals to selling price minus cost to sell. Okay. Selling price may not be given in the question, then you will be using fair value. Okay. Now, what is value in use? Imagine year 0 is today, right? Year 1, year 2, year 3, and year 4, right? In year 1, the asset will recognize $10,000, will generate $10,000 cash inflow. In year 2 it will generate $12,000 cash inflow. In year 3 it will generate $8,000 cash inflow, and in year 4 it will generate $6,000 cash inflow, right? And assuming that the interest rate is 8%, we will be calculating the present value of these cash flows on today's date, so that we get the present value, right? Present value of future cash flows is value in use. So what is recoverable amount? Recoverable amount is higher of these two things. First is fair value less cost to sell, and the second is value in use. Okay, I hope this is clear. Now let's move on to what is cash generating units. Cash generating unit is the smallest group of asset, generating independent cash inflows, right? This thing is very important cash generating units includes most of the practical questions of impairment. Okay. Now let's see what is impairment, how impairment happens, right? So, single asset impairment. For example, the recoverable amount is 50,000 and the carrying amount is 60,000. What will be impairment loss? Impairment loss will be 10,000, which means 50,000 minus 60,000. It is loss, right? That's why it is in negative, right? So this is the thing to remember. How to calculate impairment loss? It is recoverable amount minus carrying amount. Okay. Now single asset is easy. Let's see what happens with cash generating units. Right? This is an example that I have taken. That goodwill is 10,000, property plant and equipment is 25,000, patent is 10,000 and inventories is 50,000. Okay. Now total cash generating units is 95,000, right? And in the question they have given the recoverable amount of carrying CGU is 80,000. Okay, dollars. So what happens when we allocate the impairment loss to the assets? How to allocate, right? These are the conditions that I have mentioned, okay, for allocation of impairment loss in the case of cash generating units. Okay, so what happens? It will be allocated first to specifically impaired assets. Okay, specifically impaired assets. This I have covered in condition 2. Okay, but here I have taken goodwill fully and non-current assets on pro rata basis. Okay, these are the conditions. First, we will be allocating to specifically impaired asset. Second, we will be allocating to goodwill. Third, we will be allocating to non-current assets on pro rata basis, which means we will be dividing the impairment loss into the ratio of non-current assets, right? Now, what is the impairment loss? Impairment loss is 15,000. How I got 15,000? 80,000 is the recoverable amount and carrying amount is 95,000. So 15,000 is the total impairment loss, right? There is no specifically impaired asset given in the question, right? What is specifically impaired asset? I'll be telling you in the situation 2 in some time, right? Now what happens? Second is we will be doing it for goodwill and third for non-current assets, right? So what is goodwill? How much is goodwill? Goodwill is 10,000, right? So we'll be allocating full impairment loss to goodwill, which means the goodwill will become 0, right? So from 15,000 impairment loss, we have already allocated 10,000 to goodwill, right? Now remaining loss is 5,000. What will happen to 5,000? 5,000 will be allocated to non-current assets in the ratio. Now the thing to remember is non-current assets. Okay, current assets should be ignored for CGU impairment. Okay, this is the thing to remember, that current assets will be ignored. That's why we will be allocating the whole remaining loss to the non-current assets only. So the non-current assets are property, plant and equipment and patents. And we will be allocating in which ratio? We will be allocating in 25:10 ratio, right? 5,000 will be allocated into the ratio of 25:10. What is the answer? 5,000 divided by 35 into 25 is equals to 3571, right? And for patents, it is equals to 5,000 divided by 35 into 10 it is equals to 14281429. Okay, and the inventories will be as it is. Okay, so these are the amounts for impairment. Okay, these are the amounts for impairment. So let us calculate the carrying amount, which means 25,000 minus 3571 is equals to 21,429, right? And 10,000 minus 1429, it is 8571, and 50,000 will be as it is. Okay, because it is a current asset. And now the new carrying amount will be 80,000. So this will be the treatment for the cash generating unit. Okay, now let's see that we have allocated this 5,000, remaining 5,000 into ratio of PPE and patents. Okay, so we have allocated the whole impairment loss. Now comes the second condition that I told. Additional information has been given in the question that patent has been outdated and its current market value has been dropped by $2,000. Okay, which means they have given a specific impairment on patents of 2,000. So the impairment loss is same as above, which is 15,000. Okay, 15,000, which is 80,000 minus 95,000, right? This 15,000 we'll first allocate to patent, which is 2,000. This is patent, and also this is specifically impaired asset. Okay, so this thing you have to remember, that specifically impaired asset will be impaired before goodwill, right? Then the goodwill will be impaired, which is 10,000. Goodwill will be impaired, right? Now what will happen of the remaining 3,000, right? The remaining 3,000 will be allocated to property, plant and equipment. Okay, so the remaining loss will be 0. Okay, now what students do, they do this correctly, 2,000, they do this correctly as well, 10,000. They make a mistake in this part. Okay, what mistake do they make? They make that the remaining loss, they divide it into patent and PPE in the ratio. Okay, but this is wrong, because PP has already been impaired, right? Because in the question they have given that it is only dropped by 2,000. It cannot drop further, right? If the value of patent is 10,000 and they have said that 2,000 is impaired, then the remaining is 8,000. We cannot further impair the patent, right? That is my point. So you have to say, you have to allocate the remaining 3,000 into the remaining assets. So what are the remaining assets which are not been impaired? Patent has been impaired, right? Goodwill has been impaired. So there is only one remaining non-current assets, which is property, plant and equipment. So this property, plant and equipment will be allocated the remaining loss of $3,000. Okay, I hope my point is clear. Okay, now let us do the reversal of impairment loss. I have taken an example. In the example, the asset has a carrying amount of $10,000. It has a recoverable amount of $8,000 and it has a remaining useful life of 5 years. So what is the impairment loss? Impairment loss is recoverable amount minus carrying amount, which is 8,000, which is 2,000. Okay, 2,000, which arises by 8,000 minus 10,000. Okay, I hope this is clear. Now the new new carrying amount will be equal to 8,000, right? Because 2,000 has been impaired, so this will be the new carrying amount. Now second impairment, what happens? This is after after 3 years, okay? Or we can say at year end 3, at year end 3. What will be the carrying amount? Carrying amount at year end 3. Carrying amount at year end 3 will be 8,000. Remaining useful life is 5 years. And how many years have been passed? 3. What is the depreciation that came? 8,000 divided by 5 into 3 is equals to 4,800. 4,800 is the total depreciation, right? Total depreciation, right? What is the carrying amount? Carrying amount is 8,000 minus 4,800, which is equals to 3,200, right? This is the remaining carrying amount, okay? And now the carrying amount is 3,200, but the recoverable amount is 4,200, okay? So the question arises that will the reversal be equal to $1,000 or not? Okay, the answer is not. No. Why? Because we will have to calculate one thing further. What is that thing? We'll have to calculate calculation of carrying amount if no impairment previously occurred. Okay, so how we'll be calculating that? So what is the carrying amount if no impairment? What is the carrying amount at start? What is the carrying amount at start? It is $10,000, right? What is the remaining useful life? Remaining useful life is 5 years. And how many years have been passed? Years passed is equals to 3 years. 3 years have passed, right? So the depreciation till third year end will be 10,000 divided by 5 into 3, which will be 6,000, right? $6,000 is the total depreciation. Total depreciation. Okay, this is total depreciation. What is the carrying amount? Carrying amount at year end 3 will be equals to $10,000 minus $6,000, which will be equal to $4,000. Okay, so this is the carrying amount if no impairment previously occurred. So what we have to see for impairment, we have to see that lower of first carrying amount if no impairment previously occurred, and secondly we'll be seeing recoverable amount. So we'll see lower of carrying amount if no impairment previously occurred, and we will see recoverable amount. Okay, so now what is the recoverable amount? Recoverable amount is 4,200. right? And what is the carrying amount? Carrying amount is 4,000. What is lower between 4,000 and 4,200? Obviously 4,000. So we will be calculating impairment, reversal of impairment from the lower of these two. What is lower? 4,000 is lower. So what is the reversal of impairment? It is 800. How we got to 800? 800 is 4,000 minus 3,200. Okay. Now comes condition 2. In condition 2, recoverable amount is 3,800, right? Carrying amount we have already calculated. The carrying amount is 4,000. The carrying amount is 4,000 and the recoverable amount, the new recoverable amount is 3,800. What will be the reversal of impairment? The reversal of impairment in this case, in condition 2, the recoverable amount will be equals to 600. How did I arrive to 600? It is 3,800 minus 3,200. Okay. Why we took 3,200 instead of 4,000? Because 3,800 is lower than 4,000. What is the condition? Condition is lower of carrying amount if no impairment previously occurred and recoverable amount. So carrying amount if no impairment previously occurred is 4,000 and recoverable amount is 3,800. So what is lower? 3,800 is lower. So we took 3,800 and we subtracted it from the previous carrying amount, which is 3,200, right? I hope this is clear, right? Now let's move on to further topics. We have covered this in single asset, how to calculate impairment, carrying amount minus recoverable amount. Okay. Recognize in P&L unless reversing a revaluation surplus. Okay. CGU impairment allocation. First to goodwill, remaining allocated to pro rata basis. First to goodwill, exception is when specifically impaired asset is there, goodwill will be impaired after specifically impaired asset. Okay. If the question has specifically mentioned, that there is an specifically impaired asset, then you will first allocate to specifically impaired asset, then you will allocate to goodwill. Okay. I hope this is clear. There are some minimum limits as well. So what are the minimum limits? Minimum limits are asset cannot be reduced below the higher of fair value less cost of disposal, value in use or zero. Okay. So these are the things, and this is sensible because we know that recoverable amount is higher of fair value less cost to sell and value in use. So that is what they have given, right? And they have also included additionally zero. It cannot be lower than zero. We also covered reversal of impairment, right? Reversal is allowed for PP, intangible with finite life. Reversal is not allowed for goodwill. Okay. This thing you have to remember, that reversal cannot happen for goodwill. Okay. Now rules are revised carrying amount cannot exceed when it would have what it would have been without impairment, right? So this they are talking about this part, right? In the notes, this is the part that they are talking about. Okay. Reversal goes to P&L unless reversing previous revaluation decrease. So what happens? See, firstly, we have recognized this in P&L, this in profit and loss as impairment loss, right? Okay. Now, for property, plant and equipment, we know that the gain arising on uh, revaluation goes to the OCI, right? But here, previously an impairment loss has been recognized in P&L, so we will recognize the 800 in P&L. Okay, we will recognize the 800 in profit and loss. Okay, and 600 also in profit and loss, depending on the condition. In first condition will be 800 in P&L, and in the second condition will be 600 in P&L. Okay, what if the reversal of impairment was 2200, right? Just taking an example, if it would have been 2200, then 2000 would have gone to 2000 would have gone to P&L, because we have previously recognized an impairment loss. Now the remaining 200 will go to OCI, because this is excess, right? So that is the concept, right? Revaluation model interaction, that is what I told you now. Goodwill impairment must be tested annually, cannot be tested alone. It is tested at CGU, right? It is tested with cash generating units only. Impairment always allocated to goodwill first, right? No reversal ever permitted. So goodwill is not reversed, right? Impairment on goodwill is not reversed. So that is it for these chapters, and I hope intangible assets and impairment is clear. To study revaluation, you can go to my previous lectures for property, plant and equipment. There I have explained revaluation in very much detail. Okay, and thank you for watching. Please like and subscribe my YouTube channel. I'll be attaching my LinkedIn and Instagram link. Please do follow my Instagram page. I post a short form content there, and do connect with me on LinkedIn, because I post a lot of valuable content on LinkedIn as well. So thank you for watching. I hope you liked the lecture, and please support my YouTube channel. Thank you.